So thrilled to have you, Nate. Thanks so much for doing this. As an introduction for Nate, Nate is a hands-on, cross-functional restaurant executive with a track record of identifying actionable opportunities that drive growth and profitability. During his career, he spent time with multinational as well as regional growth brands and has extensive experience in both finance and accounting roles as well as operations. Currently, Nate is an operating partner at Pippett Consulting, where he supports clients on managing their capital used for development projects and facilities management. This broad range of experience allows Nate to offer a unique and balanced perspective in achieving his clients' objectives. So Nate, thank you so much for joining us today. We're thrilled to have you. It was nice to see your face when you were part of the space with Clover, but we know you've gone on to do awesome work. So thrilled to be continuing to work together through Pippett, and excited for the presentation today on a topic we've had a lot of questions about and folks are very interested in, particularly related to these times. So thank you, and take it away.
All right, can you hear me?
Yep, you're good.
Awesome, thanks. Thank you for the introduction, and thank you, Lauren and Carol, for putting this on. I know I've listened on a few of them, and they're immensely helpful. And I think that in this time of uncertainty, it's just great to have whatever resources you can have to gain information that can help us to try to navigate these very unclear, cloudy waters. So thank you very much for doing your part with this. And thanks to everybody for joining us today. As Lauren mentioned, my name is Nate Berkowitz. I work for a consulting group called Pippett Consulting. Our focus is around supporting restaurant clients on managing their capital from a development and facilities management perspective. You can see we have a number of other services that we provide, but really our bread and butter is how do you make sure that you're managing your capital for all of your capital related projects, like new restaurant builds, refresh programs, and then your ongoing asset facilities management. Not surprisingly, our business has slowed down a bit right now, given everything that's happening in the restaurant sector. One of the things we'll talk about in a few minutes is some of the types of programs that you should be putting on pause right now if you have the ability to do so. One of those is any sort of capital improvement projects on your spaces, or just generally speaking, if you have the ability to hit the pause button on those, it makes sense. And so we've experienced that with a number of our clients, and I'm really happy that I'm able to spend some of my time talking about these types of things, try to help others with their business, again, as you're navigating through these challenging times. So to jump into what we're going to talk about today, I'm just going to kind of talk conceptually about how I think about cash flow management in general, but more specifically how I'm thinking about it right now. Everything that we're talking about today is stuff that I'm focused on for my and my partner's business as well. And the fact is that we're dealing with an environment right now where the landscape is changing every single day. We have new information coming out about both the economic impacts of this the pandemic, but also everything from what's happening with government relief to our local jurisdictions. How their regulations are impacting our businesses as well. So just kind of start off with a general approach. We're going to talk about managing the cash inflows. If you do have revenue coming in, what that looks like, what other types of cash inflows you may be able to tap into right now. And then also just a quick overview of some of the different government relief options for small businesses. We'll then jump into cash outflows a bit, again, talking about how you can control that lever or those levers. Look at how I like to forecast cash flow, and a model that I put together that I hope will be helpful to some of you. It may look very similar to what some of you are already doing. And then just talk a little bit about, what steps you can take once you do feel like you have a good handle on managing your cash flow right now, and kind of what's still to come. So the approach, the way I'm getting my head around this is there's really, two separate pieces here. First and foremost is try to keep it as simple as possible, right? The name of the game right now is cash preservation. And that's really just, impacted by two factors, right? What cash do I have coming in? What cash do I have going out? That should be your main focus, very simple, as you're thinking through how you manage your cash. And again, understanding the different levers you can pull and push in order to manage those two components. The other piece is be deliberate, and I'd also like to add to that, be thoughtful. I think that everybody who's on this call right now, or anybody who's listening to this afterwards, has been confronted with decisions that either they never thought they would have to make, or that they have not made before, and they don't know necessarily right away what the right answer is. And the fact of the matter is that you're going to make better decisions if you just take each thing one step at a time. Don't get ahead of yourself. Focus on the issue that you have right in front of your face at that moment. I know this is going to sound pretty cheesy, but one of the things that I've had ringing in my head for the last month or so is actually a quote from Frozen 2, which I have two small girls and I watched probably 5 or 6 times since it came out on Disney Plus. And the quote is, when one cannot see the future, all one can do is the next right thing. And I think that really speaks to kind of what's going on right now, right? We don't necessarily know what's going to happen in the future. All we can really do is just focus on that decision that's right in front of our face right now. So that's my Disney quote for the day. Promise there's no more. So cash inflow, first and foremost. Where do I have cash coming in from? I've broken this down into a couple of different buckets. But at the end of the day, I think it's a great exercise to sit down and really map all of this out for your business, whether that's a restaurant or some other food and beverage related business. You have your traditional sources first and foremost. So you have your funding from your credit card processing. If you still have revenue coming in, that's great. Do your best to forecast out what you think that the credit card component of that will look like. Same goes with the cash component. Think about that, both in terms of the immediate, what you have coming in right now, but also what you project to have coming in the foreseeable future. I'll get to this point again in a few minutes, but you really want to be thinking about your cash position on a weekly basis. So when you're doing your forecast, build it. I recommend doing a 13-week cash flow forecast and build it out by week, and really think about each of these components in terms of, this week, what do I have, next week, so on and so forth. One thing that has been, I think, really great as communities have rallied around restaurants specifically, but other businesses as well, is around gift card sales. It's a really great way to support restaurants or other businesses right now, to buy gift cards to them. That's immediate cash in the door for them. And then, when you're able to start to visit restaurants again, you'll be able to use those gift cards that you purchased. But it's a really great way to support gift cards and a great way to bring in some additional cash right now. Another piece is any outstanding AR that you have. Please, make sure that you are really looking at your AR aging reports, seeing who may owe you from past sales, and doing your best to recoup any of that that you can right now. I think that's a great source of generating some additional cash flow. New opportunities, and really what this looks like is perhaps you're expanding. If you are still open and you are still generating revenue, maybe it's expanding your product offering to some extent. Maybe it's offering some stuff that you weren't offering before, perhaps. I've seen some really great examples of restaurants specifically that are bringing in products from their vendors or their suppliers, again, that they may not have offered before, but that are things that their customers may want, even things like toilet paper and cleaning supplies and so on and so forth. It's also a great way to support your vendors through this period of time when they've had a lot of their customers close down or scale back significantly. So anything you can do to help them to turn product is great for them in the long run as well. And as you know, I'm sure everybody has seen good examples of, there's a lot of opportunities to help each other while we're helping ourselves or while we're trying to do good for others as well. So I think that's a great piece too. And then the last one is, merchandise sales. Try to push any merchandise that you have, whether it's through your website or other. The next piece here is funding sources. So if you have not gotten your head around this already, and it's been very complicated and ever changing, there are some great options through the CARES Act that was passed. The Paycheck Protection Program, or PPP, is a great resource. I'll get into these very briefly, but if you don't know a lot about these right now and you want to know more, I definitely recommend that you go to, there's a number of different places where you can find information on these. If you have a great law firm that you work with or an accounting firm that you work with, they'll often have great materials on this and very detailed advice on exactly how to navigate these options. The SBA website does. If you're a restaurant and you go to the National Restaurant Association website, they have some great resources as well. So past what we're talking about right now, there's some great ways for you to get additional information about these. So the Paycheck Protection Program is applied for through a bank or banking institution or lending institution. It is not through the SBA directly. The applications did begin, they started to be accepted last Friday, but you can absolutely still do that right now. I believe the application window is through April 30th. I don't have that exact date in front of me. And they are to cover you for an 8-week period after the loan is filled. The maximum amount you can take out is 2.5 times your average monthly payroll. Average monthly payroll can be either your average monthly for the calendar year of 2019, or it can be the trailing 12 months starting February, I think 14th of 2020. And the one caveat on that is that all employees are capped at 100K. So if you had an employee that was making 120K, their component of that can only be 100. There are a number of details around how the money should be used. I'm just going to go very high level here for a sec. They're intended to be used for payroll, utilities, rent, and mortgage interest. I definitely encourage you again to get more into the details of this. There are nuances around how little you can use for payroll, and also at what points of it, depending on how much you're using for payroll, will be forgiven. And any amount that is not forgiven, you have a 6-month grace period before you have to begin paying it all, and it's a 1% interest rate with a total term of 2 years. Another really good one to check out is the Economic Injury Disaster Loan. That is applied for directly through the SBA, and that's for small businesses with less than 500 employees. There are definitely, again, encourage you to go get more information on this, but there is the ability to apply for one of these loans for individual restaurants. It does not necessarily mean that if you have 100 restaurants and you have more than 50 employees on average at each, or locations, I should say, that you are not eligible for it. So I definitely encourage you to look into that some more as well. Just a few others. Access any lines of credit that you already have established with banks. That's something that has been happening a lot over the last few weeks, and is definitely a great source of additional capital right now if you need it. There are investors that are out there that are sitting on the sidelines that are going to be opportunistic during this period of time, because there's going to be need for for their capital as well. So if you have investors that you've talked to in the past and you are interested in exploring that option, I definitely encourage you to speak with them again, potentially. And then the last one is if you have physical locations that have security deposits, you may have the ability to tap into to that money through a conversation with your landlord, maybe draw down on it for a period of time. You will, I assume, have to replenish that at some point, but that might be another source of cash if you need it right now. All right, so cash outflows. The way I get my head around the outflows component is that you really have your essentials and your non-essentials. And your essentials are either those items that are essential or required for you to be able to continue to operate, or those that you have a significant interest in continuing to cover. So, for example, a debt payment. You may not have the option to defer payment for a period of time. It may be something you are obligated to pay. Perhaps there's a personal guarantee associated with it. So, so that's something that's categorized as an essential. An example of a non-essential would be something like uniforms and linen. Perhaps that's an item that you don't need right now because maybe you're not open, or a music license. If you're not open, you don't need to have music playing in your location. So think about what some of those are and how you may be able to turn those off. I think that another way to think about essential versus non-essential is an essential is something that you need to, maybe instead of thinking about turning off completely, you need to think about finding some relief from it for a period of time. So just another way to think about kind of essential versus non-essential. You're going into to dig into just a few of the essentials for a moment. I think kind of the big ones that I want to talk about are your rent and debt payments, and also suppliers. So for your rent, I highly encourage you, if you have not already, to have a conversation with your landlord, a very transparent conversation, and explain that you need some support from them right now in order to weather the storm. I've heard some great anecdotes in the last few weeks of very successful conversations that tenants have had with their landlords. Early on in this process, I think the best advice that I've heard given came out of the Restaurant Association, where they recommended asking to convert to a full percentage, a rent as a percent of sales scenario for the remainder of 2020. That will ensure that while, if you're just right, you're not paying anything in rent. If you're, have taken a serious hit to your business right now, but you are able to operate, you'll still only pay a more manageable amount as a percentage of your overall revenue. And then as stuff starts to ramp back up, coming out of going into the recovery time, your rent will be more appropriately aligned with your sales. Any difference between what you were supposed to pay per your lease obligations and what you actually paid can be tracked and perhaps layered in over the course of a period of time once your business has gotten back up to a more normal level. And the same goes with I think your debt obligations. Have a real transparent conversation with your lending institution. Explain to them your unique scenario, and explain to them that you need them to be a partner in your business right now and help you to be creative on how you can continue to weather this. As I mentioned in the beginning, another key point is if you do have any capital projects that are currently underway, any renovations, any new restaurant builds, if you have the ability to hit the pause button right now, that is highly recommended. It may be the case that you were mandated by the municipality where you are to actually do that anyway, but that's something that can help you to turn off that hose on capital projects. And also looking into auto payments. Any auto payments that you have, I would recommend I would recommend turning off the auto component of that so that you can more carefully manage when that money is going out. One thing that I've seen in the past is a lot of times there's auto payments that are hooked up to credit cards. I may recommend reviewing your credit card activity for the last maybe 6 months and just seeing what is in there in the details that maybe you forgot about or something, as a reminder to turn that auto payment off. I said I was going to mention this before. I think I forgot to. Discussing extending terms with suppliers is another way that you may be able to extend your runway on cash flow a little bit too. I think that is all. So again, as I mentioned before, all of this ties into a cash flow forecast that my recommendation is to do it on a rolling 13-week basis. And so what I mean by that is you create it for a 13-week period, starting in either the week you're in or the next week, and continue to build onto that as time progresses, and also update your weeks with actuals as they're coming in, so that you can accurately see what your cash balance will be over the run of your forecast. This should be a weekly exercise, if not daily, in order to see if anything occurred in actuality outside of your plan. Perhaps things will happen that will change your forecast for either revenues or expenses. And again, I think the more frequently you do that, the more accurate you will be, and the closer you'll be able to really track this. And to that point, it's important to understand that this is very much a fluid model that will change, and that you will have the most success with if you are looking at it on a regular basis. I'm just going to switch over here to bring up an example of what I'm talking about. You may have something similar to this that you're currently using. If anybody would like a version of this, we will be sending this out to all the participants after the webinar. Just to kind of walk through the way that this is structured, and again, getting back to one of our tenets at the beginning, simplicity is important right now in order to properly, I think, to really effectively to manage all the components of this. We start off at the top with our sources of revenue. I've built in just 3 rows here. You may have more, but the important piece is tracking the different sources properly so that you can forecast them out as accurately as possible, as some may not be directly tied to each other. So one may be your credit card funding, one may be your gift card sales, one may be your merchandise sales. Just like you would on your income statement, you track here what you want to be able to measure, what you want to be able to forecast. Next section are your expenses. I've just broken out a few here, but obviously, again, just like with the revenue component, make this as detailed as you want to be able to properly and accurately forecast out. Here we have your AP, we have your payroll, rent, and a row for insurance as well. These break down to a net component, and then I've added in a section below for your capital items. If you do have debt payments, that's where these will be layered in. And if you are projecting out that you're going to be able to tap into any of these government relief options, that's where you can plug those into your model as well for when you think you may be seeing those monies. We have a total change in cash row, and then a cash balance row that tracks the impact of the ins and outs, the net impact of the ins and outs, and that all feeds off of an opening cash balance. So you start with what your cash balance was on the date that you began the model, and then it will build out to see what your cash flow will look like at the end of the 13th week. Again, my recommendation would be when you have actual information, you update the full column to be the actuals, and that you layer on an additional row each week so that you can see out for a full 13 weeks. I've also included a section down at the bottom here because I think that it's very important to track your deferred payments. If you have any items, whether they be payments to vendors or rent amounts or a debt payment, I highly recommend that you track all of that so that you can see what your total cumulative payable is if you're building it up over the course of a period of time. This is an exercise that you'll want to understand what that nut looks like at some point. And so the more diligent you are about tracking it from the start, the better off you'll be in the long run. I think the last piece here is I just, for organization purposes, the way I do this and my recommendation would be is every time you're making a change to this, saving a new version. So if you've worked on it today and you're done with it today, save a version for today. When you go to work on it tomorrow or next week, save that as a new version. That way you can look back and have really good records of some of the decisions that you've made over the course of this period of time. Okay, I'm just going to switch back over to the presentation. Great. So you're doing a terrific job of managing your cash flow. Now what do you focus on? I think, number one, not written here, but we talked about this enough times already, is you're constantly going back to that cash flow forecast and updating it. I would also recommend a few other things. Take a deep dive into your expenses. That may look like even printing out your general ledger for certain accounts and going through them with a fine-tooth comb in order to identify if there's anything else that you maybe missed either in your forecast and in your projections, or maybe there's other recurring items that you didn't think of that you can turn off right now or you can renegotiate for a period of time. Ongoing revenue projection, again, this is something that you're doing on a weekly basis. This is a fluid model. It is not a set in stone model. I think that also one of the things that's important right now is, while we are all focusing a lot of our energy on being positive and that's very important, I think it is also important to understand what your potential worst case scenarios are and include those maybe in a separate forecast or even in your ongoing model. This is not a time to tell ourselves necessarily that things are going to be better than they actually are. I think that it's a good time to stay positive and to keep our focus on important things like our health, our family, and the health of our business and our employees. But I think it's also important to understand, okay, if I'm able to be generating revenue right now, that's great. What if I can't in a week, right? What is that going to look like? And then the last piece is, as difficult as that is right now, and it's going to be easier and easier with each ongoing day as we start to come into whatever recovery period looks like, what are my working capital needs going to be at the point in time where I either am able to start to ramp back up if I'm still open, or if I'm able to open back up if I'm now closed? Hopefully you can do that with the cash reserves that you have or with the revenue that you're generating, but you may not be able to. And going back to some of our other funding sources from a few slides ago, it may be important to start to have some of those conversations now. If you're a restaurant, are you going to have to, and you had to get rid of all of your product, are you going to have to buy a completely new inventory? When you do open back up or when you do ramp back up, you'll probably have a few payrolls to go through before the revenue that you're trying to generate will give you the cash needed to cover those. Same goes for some of the big payments like rent, like insurance, like debt payments. So start to think now about what your needs will be at that point in time. And again, plan for that, include that in your in your forecasting, or include that in some of the conversations you're having right now with either investors or with other lending institutions. So Lauren, that's my presentation. I hope that was helpful, and I'll open it up for questions.
Great, thank you, Nate. If anyone has questions, you're welcome to submit them via the chat or unmute yourself and ask at this time. We also recognize it's a little over 1:30, so if you need to jump off, shoot us your question via email, and we're happy to share it with Nate. So does anyone have any questions? You can unmute and ask. Okay.
I also covered everything so
thorough, Nate. Yeah. So thorough. Well, if you do have questions, please shoot them to us at info@branchfood.com. We will pass them along to Nate and get them asked or answered. And thank you very much for that presentation, Nate. We really appreciate it, and it's great. Great guidance and great information to keep in mind as we're all looking at our cash flow these days, and really focused there as opposed to kind of the yearly projections at this point. I think in our financial cycles. So appreciate your time and guidance. To those of you on the call, thank you for tuning in. We hope this has been greatly helpful for you as you're thinking about cash flow for your own businesses right now. We look forward to having you tune in tomorrow. So tomorrow's speaker will be Tina Adolfson, Marketing and Data Innovation Lead at Survey.com. She'll be speaking about decoding CPG sales and trends in the time of COVID. So not to miss that presentation. As a reminder, all presentations, past presentations can be watched and are linked through branchfood.com/servingupsupport, and all upcoming seminar information is listed there as well. So we look forward to seeing you all tomorrow. Thanks again, Nate, and take care, everyone.
Thanks, Lauren. Thanks, everyone.
Bye.